All right. Good morning, everybody. Kind of a weird, busy day. We're gonna have Powell out there chipping teeth. Got the president chipping teeth. Got a lot of headline news through his Middle East trip. We've got Walmart. Their earnings are already out, but I'm waiting for the CEO to come out and contribute something as well. So that's a lot of stuff. Plus, we got job numbers and PPI. I'd like to think that by the time the morning is done, we have a clear afternoon, but we don't even have that because we've got Fed speakers this afternoon chipping their teeth as well. It's going to be one of those days. On the one hand, it's likely to be very busy. So, at least we have that. But on the other hand, if it isn't all moving the boat in the same direction, we could end up with a choppy sideways day where we just can't get anything done. And we have auctions too. Fantastic. All right, there won't be any Q&A with Pal, so that'll help out a little bit. If there was Q&A, we'd have a whole different thing to worry about, right? So that's at least good to know. And it looks like we're going to have two different events with the president today. He's got the round table, and then he's got another event where he's speaking with troops. Bar this afternoon, no Q&A either. So, hey, we'll take it, right? That cleans it up a little bit. Have to, find the silver lining somewhere. So we are above the volatility trigger. We're still above zero gamma. The call wall is in a new spot. And the put wall, 52.19. It's a long ways off. My concern with Walmart is that they can really move us, right? It's not the earnings itself. It's what they say afterwards. And I'm looking for the next pullback, right? We have our higher low, the higher low that we've talked about before. Well, we made another run up. So we're looking for a new higher low. What's going to be the driver to bring us down to set that higher low? And will it even be here? When we're analyzing trend like this and evaluating higher highs and higher lows, you have the establishment of previous legs. They give you an idea of how far it should go, right? And when it starts to slow down, when the distance between each leg is getting smaller and smaller, it's showing that it's losing its momentum, that it could go into a distribution or even into a topping pattern. So when we're looking at the current situation, we had a deep pullback, pretty good run, shallow pullback, another run. If this is it, and we're going to get a pullback, we didn't really go all that far, right? From here, here. We didn't go very far, and that means we don't have much room to pull back because we need a higher low. We don't want to break 5,600. Now, we're at basically 59, want to do a little rounding, and we're talking about not breaking 56. Sounds easy enough. It's 300 points away, no problem. But we can move 300 points pretty easy in the S&P. So that's what we want to keep our eye on. We're still tangled with the 200. If we break the 4-period moving average, we can retest the 10. That would be a nice place to get a higher low. It is measurable, formidable, and if we overshoot it even a little bit, we get into 57.50. That is a perfect place to turn around and start moving back up again. It doesn't owe us a pullback at this point. We could continue to go higher first before we get a pullback. This red day that we have right now isn't done, right? Surprise. And it could end up with a day like that by the time we're done, for all we know, right? And that ended up not being a pullback off of this drive. So at this point, it's red this morning. It doesn't have to end that way. And we could continue higher, still not getting a pullback yet, right? But Walmart can turn this into a candle that closes red and closes down and gets us moving towards that 10. That's the concern. Here's that 10. If you want it on the intraday, it's a lot lower down, 57.70, overshoot into 57.50. That's doable. Overnight volume 87,000. It's back into a more normalized range. You can see 70, 80, 80. That's great compared to 120, 250, those really crazy blowout numbers that we had been seeing lately. So less than 100 is putting us back into a more normalized overnight trading session. We still don't have Spot Gamma's founders note yet for the AM session. It's likely they're just going to wait until 8:30, right? We get that economic data print and then they'll come out. We are closer to the lower ADR than we are the upper ADR, which implies we'll go ahead and go down and hit that 58.50 level. It doesn't owe us that, right? We don't have to do that, especially with economic data on the table. But simple enough, if we break our own Globex low, that's the target. We're talking, from 66 to 51. So do a little rounding there. It's about 15 points. Nice play. To make that, we also have to break Tuesday's intraday. Not really a big deal. Should be able to handle that with no problem. And we're just looking to maintain the inside day breakout that we've already established, breaking out of Wednesday's range. We really don't have any reason to believe that we would take a full ADR in a single direction unless Walmart says something really bad or one of these other events today shakes the market off of its foundations. We shouldn't get anything that extreme today. If we can get to the lower ADR early enough, we can go to the other side by the end of the day. That wouldn't necessarily put us in a bullish bias as much as just the way price works, right? It's just a part of the wave behavior of price mechanics. If we try to rally back up, we have yesterday's range now as resistance. You see the RTH low. That's the level that we have to fight through now if we're going to try to rally back up. And it's really close to the cog line, 58.92. And it's deep wicks also. So we'll see if we can manage that, but it's a perfect setup for a nice rounding formation here. And like a could end up with a really nice 3-bar reversal, evening star. maybe even get a gap down tomorrow that completes the pattern and brings us down into that 57.50. We'll see how it goes. All right, we did survive yesterday without hitting the floor pivot. So that's 3 days in a row with a missed daily pivot. Funny enough, we haven't hit today's either. So it's a fourth one, but now it's over our head rather than being underneath us. Still, it is a very narrow channel. A narrow channel implies if we break out, that the breakout sticks and we keep the breakout and continue moving in the direction of the breakout. It's not much of a surprise. We already are broke out, right? This is yesterday's range and we're outside of it. Ta-da! The narrow channel implies that we keep it though, and that we don't come back in again. Now this channel doesn't make price do anything. So it's not going to keep us out. If we can get through this green line, we're going to get back inside the range. And of course, the narrow channel implying that a breakout can happen and that it can stick. It doesn't mean that it can't break out the top and go that way instead. That would require a more robust flow than we have this morning. We would need, to really see things kick into high gear. Mag 7 lifting the boats, a lot of intraday options activity, some headline news, changes in the dollar and yields, something, right? And preferably a combination of those somethings to get a topside breakout like that. If we do get back inside of our own Globex range, that floor pivot is a solid target to the upside. One, it looks like it's really close to the midpoint of yesterday, so it's a half back. It's close to the close of yesterday, and it's a floor pivot, so we would expect to hit it with 80% anyways, right? This is what markets do 80% of the time. They hit their floor pivot. So if we get back above 58.92, that's my goal. Get there. If we manage to get above that, then target yesterday's high. And if we can get above that, then we start focusing on the extensions 111, 1236, on and on. $59.11. We left a lot behind up there, and just getting back inside 59 would be monumental. At this point, it's hard to see what the data is going to be that is so good that can get us back inside that box. What would be even better is getting us through that cog line. And so far this morning, we don't have anything on the table that can give us that. Holding the line would be about as impressive as it can get. We do have this shallow area here, and price can move through a shallow area really fast. Kind of surprising, really, that we started the move down and we actually stalled somewhere along the way and have bounced back up. Really surprised to see the stall there at all. But you can see at 5,900, this big distribution level up here and the point of control up there. Be really surprised if we can get back inside that box this week. Certainly not today, unless, like I said, we get some really great headlines that we can't see at this point. $10-day, 30-minute volume profile with TPO. The point of control on both sitting down at the lower end of the chart. We are outside the value area on both, although the value area on the TPO is a lot lower. More of the distribution is compacted into that smaller range down here. But it is a really wide range from basically 56 to 59.5. It's a couple hundred points. There's been times in the last year or so when we had a range as narrow as 75 points. So seeing it, 250, 350, big range. We are very close to having the point of control moved for two different reasons. One, we are eliminating the candles from the bottom down here. For every new candle we get on the right, we are losing one on the left. Two, we've built out a lot of volume across this high. If we get a run back up into that 59 area that we were just talking about, then we can finish building out the volume here and move this point of control up. If it doesn't happen because of that, it will happen once we eliminate more of the volume along the bottom, and by default, it'll just move up there. Unfortunately, that will put the point of control above us at 5,900. It's a big solid level, and it will be restrictive at that point, and it will be something we have to get through if we want to continue that move up. The TPO does not reflect the same as the volume profile up here, by the way, with that distribution. So not as many trades, but a lot of volume in those trades. So just think of big contract positions that were being put on up here, not a bunch of one lots. We have a new VPOC from yesterday, which is kind of a surprise, really, given how tight of a distribution that was, but we'll take it. 5908. You could probably adjust that to 5909. It doesn't help to nerd out on these and try to get them exactly right. You're in the ballpark. Yeah, that didn't help. Go back to 8. You're in the zone, close enough. If we get through our own Globex high, then we've got 5908. We also have 5911 cog line, which is close enough to the 08 that I would focus on the cog line instead. Really nice classic distribution shape, so shouldn't be a surprise that it's centered in there, and we would gravitate to it. So if we continue a move up, that would be what we'd expect. A little disagreement this morning between our TPO and volume profile. The point of controls don't match. Not a big deal, and it's kind of an ugly profile this morning. No real shape to it yet. Just high volume nodes. The Globex high today on the ES would be where it opened. That's what I've got. So I guess it just depends on your broker, right? It shouldn't. Your open should be like mine. What'd you say you had? Oh, it's Trading View is giving you an issue. Yeah. It is no, not even 10. 5904 is what I have. The Globex open. If your Trading View is showing 5910 for the ES open, your Trading View is way off. Maybe you're on a micro. It shouldn't matter, but look. Yeah, something certainly changed overnight. Yeah, the micro is only one tick off, 5904 and a tick. I have certainly done that myself, so I get it. That's why I don't like those indicators that get your open, high, low, close, overnight high, Globex low. I don't like those. I would rather just draw them myself to validate and make sure that they're doing what they're supposed to do. It's okay if you're jumping through a lot of stuff, right? If you got a watch list and you're going through the list then yeah, it's okay to have an indicator. That way you don't have to draw on every one of those products. But if you're, a futures trader and you're trading the same futures every day, I'd rather draw my own lines. And TradingView's got some great tools, but just like Thinkorswim, if you can't trust Thinkorswim's indicators, and if you've used Thinkorswim for a while, you'll know not to trust their indicators. Then you lose faith. If we do continue this fade back down, getting back inside the box would not necessarily be a bad target at all. Even getting the gap closed and getting back into, say, where we closed on Friday, right? Now, that is a lot more than what we're looking for, really. You're talking about 5,700, but 5,750 sounds better. It would be an overshoot of the 10 and get us into a nice solid options level and a good place to reverse and a deep enough pullback to be acceptable, just like this, right? It was a deep enough pullback to be acceptable. So I like it. We would need more than one day to do it. We don't want a candle, that looks like this with just a really big tail on it. We need some distribution and actually leave some footprints behind. That would get us in the box though. 5,750 is inside the range for the week. We can see we're fading back still from the highs and the extremes. So we're now only around 2% above the 10-day moving average, and that is continuing to decline. So that's good. There is a bit of a gravity zone like way down here, but it's a long ways off and we don't have to worry about that yet. This is just really good to see. It shows that we're normalizing. We are giving the 10 time to get caught up with us, and even a little bit of downturn here since we're down, close to a 0.5%, that we're moving towards the 10 as it's also moving towards us. So we're getting that gap closed a lot faster. It's a good correction without seeing a bunch of extremes, right? Because we don't want violent rate of change. As for the 10 week, we are still kind of holding out below that 4% level. It'd be good to see this back off some, but at least it's not getting worse. So let's see if we can just keep it under 4%, finish out the week, maybe get a little normalization and start the new week, hopefully under, say, 3.5, 3.25. Be good. I think I heard right before I started the stream today that Baba missed. Which is kind of odd, right? Because it was expected to do better than its peers. But my focus at this point still remains on Walmart and what they have to say, more than just what their earnings was, right? But what they have to say afterwards. So far, I keep watching headlines. I'm not seeing anything pop up. So, and talk about these risk on sectors that we need for a rally day. Mag 7, financials, technology, consumer discretionary, chips, communications, software. All of those are down this morning. All of those are down more than 0.5% this morning. So we have nothing lined up on a rally day at this point. We don't have Bitcoin either. We have nothing. Now that can change, right? And it could be the fuel for an amazing rally day if all of that was to turn around, but it would need to turn around, which is nice, I guess, from the point of view that it gives you something to watch. It's simple and it's easy. keeping track of something like SMH or MAGs, XLK, Bitcoin, keep your eye on those for a flip. If they, first start moving towards zero and then start getting above zero on the day, then you've got that rotation going for you. If it isn't that, then of course we could get a rally day from intraday flows, some 0-day options just coming in and pushing us to the upside, but it would have to come from something first, right? Some kind of headline or news, maybe bonds or treasuries. But so far this morning, we have nothing other than retail's up, and that's very likely from the Foot Locker, Dick's Sporting Goods situation. And the VIX is up, and that's it. We have nothing else. So there's nothing showing for a rally day. To be clear, that does not mean we have to sell off. It doesn't mean that we have to be bearish. We can just be sideways, hold the line, and not do anything more than that. Just hold the line. We've got a decent week so far. If we think about, what we've taken from Friday's close, it's all of that. So if we're talking about, just keeping the line here inside of, say, Tuesday's range, because we're already outside of Wednesdays, right? Can't keep that. But if we can keep it inside of Tuesday's range, then we're looking at 58.50-ish, 58.40, maybe on the soft side, 32 cog line. 58 sounds better than 57. And I already pointed out that 57.50 is where I'd like to see us, but not in one day, right? We need 2 or 3 candles to get us there so that we have that normalized pullback like I was talking about. So we don't want to do it all in a day. One bite at a time, getting down to, say, 58.32 today, and then down into 57.50 by tomorrow. That ends us for the week, right? And then we can come in with a gap up on Monday, start the leg back up and continue on. Sounds like a great plan. We got to get something first, right? So today is really simple enough. If we break our own Globex low this morning, target Tuesday's low. It's as simple as that. If we break Tuesday's low, target Monday's intraday low, which is basically the round number 5,800. Otherwise, if we get back inside of Wednesday's range, aim for the midpoint, get through our own Globex high, of course, but get through the midpoint, get through Wednesday's high, and then we'll use the measured move for next steps higher. Easy, right? Really not a lot to it today. The worst that could happen today is that we get a day like yesterday. These kind of days are awesome for options. But from a futures trading standpoint, I'd rather not. The funny thing is, when I see people get chewed up on a day like this and they say, wow, I got my butt kicked. That was really difficult. If I'd have known in advance, I wouldn't have traded it. You do know in advance, right? It's simple enough. You are still inside of that range. Unless you get out of it, you know exactly what to expect. That's the Globex range, right? Just tighten that up a little bit. There's your Globex high, Globex low. Unless you get out of your own Globex range, you can expect that kind of price action. So now here we are this morning. We are outside of yesterday's range completely, but we are still inside of our own Globex range. Worst thing that can happen today is that we just stay right there in that range. And let's just tighten it up a little bit. Get rid of yesterday's low, right? Stay in that range for the rest of the day. That'd be a pretty sad day. 20 points, narrow, congested, could look a lot like this, especially if we're just waiting on data. We got, OPEX tomorrow. Hard to see big positioning step in front of OPEX. And I think the CTAs were set to, I think they were set to buy in a down market. Can't remember the numbers. I can post it in the chat. Somebody had shared it with me, right? So for this week, it wasn't massive, crazy numbers anyways, but I'll put it in there. Get out of the box, right? Start with this box, 58.92 cog line down to 58.65, whatever this Globex low is. Get out of that box and you got to play. We've already lined out the levels. Pretty simple day. Everybody be careful, be safe. I'll see y'all tomorrow.